Welcome to another edition of Auxano Bytes. Auxano Bytes, is a podcast wherein every month we bring in new folks, if I can use that word, or you can say professionals who understand the business of financial services. It could be in the nature of being a chartered accountant, being an AIF, or also it could be one of our founders. In today's episode, uh, of March 2022, we have with us Yash Kakadia. Yash is a chartered accountant and a law graduate. Yash also holds a master's degree in commerce from Sydenham College of Commerce and Economics and a bachelor's degree in commerce from Narsi Munji College of Commerce and Economics. Today and currently, he is an executive director with Fedex Securities Private Limited and is responsible for business development of the group, investment funds, asset management, capital market, valuations, transaction advisory, and managing the trusteeship business. Yes, it's a whole lot of things you are managing. FedEx is also a SEBI registered category 1 merchant banker and a fiduciary service provider. Previously, he has been associated with Amicorp Group, Edelweiss, and Kitara Capital, where he held key positions across alternate asset advisory, product development, and sales. He started his career with Deloitte and SKP as part of assurance, international tax, and transfer pricing practice. So now we gather that Yash is a very seasoned professional with over 15 years of experience in alternative asset management experiences ranging across strategies, including private equity, venture capital, private debt, stressed cap credit, distressed investments, and public markets. So Yash, welcome to Auxano Bytes. You got a whole lot of experience, and it will be good to rake your brains and get the maximum in our chat today.
Thank you, Brijesh. Much appreciate for the introduction. We can start. You can tell me what are the questions.
So yes, we got connected, when we were setting up our Cat1 Angel AIF, a few years back, and it looks for me just like the other day. Having said that, right, and we started with the trusteeship business. So if you can help us understand, why is a trust form of, setup recommended for an AIF? And second part of that is that, recently SEBI has also said merchant banker is also required. So if you can first, talk about why a trust form and then how a merchant banker helps.
Sure. So, Brijesh, thank you for this. I'll answer both the pieces of the question, but before that, I'll just give you a small context on why there's a need of a trustee and why there's a merchant banker, right? So, the AIF regime started in 2012, and since then, the regulation clearly allows an AIF to be in the form of a trust, partnership, or a company, right? So the entity can be in these three forms. And as we speak, we have more than 850 AIFs registered with SEBI as on yesterday. So, the reason is that, first of all, there is no company as an AIF. The reason there is no corporate as an AIF is because, there are corporate tax implications, as well as on distributions, there is dividend distribution tax to the shareholders. And hence, company is totally out and is not being used as an AIF. So currently, out of the 850 AIFs, there is no corporate AIF. Also, on top of that, the data of company is public, right? So the shareholder data does not remain, confidential, which is the case in AIFs, because AIF is an audience which caters to institutional investors. A lot of times, the data of institutional investors, they would not choose to make it public, right? So you're left with the option of trust versus partnership, LLP. While in LLPs there's no double taxation in terms of distribution to investors, some of the AIFs have been construed as an LLP, more particularly in the Cat 3 form when they are doing business income, because there is a limit on which the MMR can be reduced from a trust structure to an LLP structure. So there are some cases, there are very few handful cases where a partnership is used as an AIF. Having said that, in an LLP, the only downside is that LLP is also governed under the LLP Act, which is governed by the Registrar of Companies, which again makes the LLP database public. So, normally people prefer to have another trust on it, or there's another discretionary trust, which then invests into the LLP, and then the LLP invests into, the listed space. This is more particularly seen in the Cat 3 space. Coming to the remaining option is that out of the 850 plus AIFs, around 800 AIFs are normally structured at trust. So now, why trust? The reason we are structuring this as a trust is because trust has a straightforward pass-through mechanism under the income tax law as well as under the AIF law. So it clearly becomes an easy way of doing it. A lot of data is confidential and it is not available under the public domain. And hence, most of the AIFs are structured as a trust. Now, what is the role? Now, the role of a trustee arises when there is a trust. So what is the role of a trustee? So the role of a trustee is essentially it starts with settling of a trust. So when you create a trust, it's a bipartite agreement between the trustee and the settler. So essentially, when you are doing a trust, which in common parlance we call it as a fund, the fund is structured as a trust. It is essentially a bipartite agreement between a trustee and a settler, wherein the settler introduces a settler amount of 10,000 or 1,000 rupee contribution and creates a trust. And because you create a trust, you necessarily need a trustee. And that's how the concept of trust, that's why the role of a trustee comes into place. So having said that, the role of a trustee is first starting with the first phase in a AIF is to create a trust. The second role of a trustee, it's more of a fiduciary role, wherein it is giving a lot of comfort and corporate governance to investors. Because what happens is that in the same trust, when investors are getting onboarded into the fund, right, it becomes a tripartite agreement between the trustee, investment manager, and the investor. So the role of a trustee is essentially that it is they are governing the entire charter of the trust, and they play a it's a very high level of a fiduciary role, which brings a lot of corporate governance to investors, because investors already are dealing with the manager, because it is the manager who are doing the private placement of the memorandum.
So Yash, if I can just come in here. So
Sure.
to summarize the first part of it, so you say the trust form is important because it one, as from the point of view of tax structuring, it is much more easy, convenient, and acceptable form. Two, in terms of data privacy, the data of the investors is not readily available in the public data space, right?
That's right.
So these two things come into play. So you actually jump to the second queue, which I had, obviously, what is the role of the trustee? And that is where you are talking about what is the role of the trustee,
Right.
to ensure the control over it.
Right.
Now, taking it forward, Keith, how do you, how do trustees ensure that the AIFs in which the trustee has a trusteeship, do or work according to the guidelines or regulation which is stipulated by the various authorities, and they are in sync with it?
Sure. So, SEBI has prescribed a quarterly compliance report, which a trustee has to send it to the fund, which states that it has complied with all the regulations of the trustees. They have made the right investment and divestment decisions. They have done their quarterly reportings on time, and it casts a lot of onus on the manager also, because essentially what is again here I would just like to diverge that what is an investment management agreement.
Okay.
Trustee empowers the manager to vest powers for making investment decisions. Now, the manager could have an investment committee or not, because that is optional, but essentially it's the board of the investment manager who makes the decision of the fund, right? So what happens is that and the trust is governed by the board of trustees. So the role of a trustee at that point happens is that because they are not involved in the day-to-day operations of the fund, whenever there is any, so the only principal activity of the fund is to make investments, right?
Right.
And after your investment period is over, it's to make divestments and exits. So at the time of every investments and divestments, the board takes into consideration what are the parameters used by the board in taking the investment decision, which is not detrimental to the interest of investors. Separate resolutions are passed explicitly by the trustee in this regards. Separately, there is an investment management agreement which empowers the manager to take decisions in concurrence with the trustee. Then there is a quarterly reporting, which I mentioned that SEBI has prescribed a form which has to be taken every quarter, which states that you've complied with all the regulations which you are supposed to. Apart from that, SEBI has also prescribed a TPM audit report, which needs to be done by September 30 every year. So the trustee has to comply with that. And apart from that, what also happens is that at the end of the year, when the trust is preparing its financial statements and they are to be audited, trustee is also one of the signatory in doing the audit. So when we are looking at a true and fair view, we are looking at the emails. Sorry, we are looking at the. We are looking at the financial statements.
No, so it is very common. So what you're saying is, is that as a trustee, you are in control at all points of time. We have the quarterly compliance report which comes in play. You have the half-yearly PPM audits which are there for majority of the categories of the AIFs. You're also one of the authorized signatories in the annual report of the fund and the trust. And by delegating your powers to the investment manager, you ensure that you also know what delegation you're doing.
Right. Absolutely.
Just a minute.
Yeah, I know.
So you're doing it right. So what I'll suggest to you is that आप जब बोलोगे ना, बोलने के बाद थोड़ा summarize भी कर लेना.
Yeah, sure.
So again, this was Yash who was sharing us the role of the trustee and how the trustees ensure control, on the AIF on behalf of the investors. Yes, one more very interesting thing which we'd like to ask you: what are the factors which an investor must know about the trustee? So you have the fund, you have the investment committee, you have the founders, then you have the trustee coming in, and then the investor comes in. So there's multiple structures which is there. So what are the things which an investor should know about the trustee?
So okay, good question. So I'll just so to put, there are in an alternate investment fund, SEBI does not govern that the trustee needs to be regulated, whether it needs to be a debenture trustee. So who can be a trustee? So a trustee can be an individual or it could be a corporate, right? And trustee is the one whom you trust for your assets. That's the reason why it's trustee. The reason I just brought this point is that, so I wanted to summarize that in an AIF context, even an individual is allowed to be a trustee, and even a corporate is allowed to act as a trustee. The reason we've seen corporate trustees, because it's just again from an investor standpoint that there is a good governance, there is no conflict of interest which is happening between the fund manager and the trustee. So normally it is at arm's length. And what you should essentially, what investors look around the trustee is that the manager and the trustee is at arm's length, and what is the board of the trustee composing of, whether they come from a investment background, whether they come from a finance background, whether they come from a fiduciary background, and whether they are conversant with the AIF regulations. Because
here the product is an AIF, so it's an alternate asset product. So essentially, the understanding of the product is more important. So from an investor standpoint, I think these three things are pretty important. So just to summarize, a trustee can be an individual or a corporate. A corporate trustee stands over an individual trustee because it works more on an arm's length basis. There's no conflict with the asset manager, and there's more corporate governance and acceptability in terms of an investor. In terms of investors' preference, what is more important is investors should look at the board of the trustees. The first people who are acting on the board are from what background, and whether there is the correct and the right mix of understanding of the product of AIF is what makes things easy and acceptable amongst all investors, fund managers, and SEBI. All three of them are comfortable with this.
Tell me one more thing. You had summarized beautifully. Why, in a very succinct manner, why, what are things which an investor should look into while looking at the trustee of a fund. Now, what are the benefits of a trust to the fund? What benefit to the trustee brings into the funds?
So it's in terms of benefits which a trustee brings, it's just an added layer of governance and added layer of check, because if it's a trust structure, there is no option but to have a trustee. So it's more of a more than what benefits. First I would like to clarify that in a trust structure, it's more of a prerequisite than whether it is required or not. So if it's a trust structure, it is mandatory to have a trustee. And once you have a trustee, obviously in terms of governance, in terms of fundraising, in terms of acceptability, investors are more comfortable with that.
And okay, so in fact, you also answered the question what is the benefit to an investor? A very interesting question next. Can a trustee be changed in between the life of a fund?
So yes, there is no, a trustee can be changed during the life of a fund. There is no prohibition for that. There are two scenarios. So, one is that a scenario where, the fund has not started its operations yet and there are no investors. And the other scenario is when there are investors. So when there are no investors onboarded on the fund, a trustee can be changed by terminating by giving a notice to the existing trustee, and obviously a reason for them why you are terminating that, and you need to intimate SEBI and the tax authorities for a change of trustee. And in case you have investors onboarded on it, you need a prior approval of 75% of investors.
Okay. Now,
the process remains the same, but yeah, you need a 75.
Yes. So what you're just saying is that in case of a fund which has got investors, more than 75% of the investors' approval is required to change the trustee. Is that correct?
That's right. That's right.
See, recently SEBI has also brought a requirement of merchant banker, and that is one thing which Fedex is offering to us.
Right.
So how has that changed? Because this got recently introduced in 2021, and what is the impact of that? In the way the AIF is structured.
Brijesh, sorry, if you can just repeat the question.
Yeah, the SEBI has recently brought in the need of merchant bankers,
Right.
and right from the beginning of preparation of the fund and the AIF. So how has that changed?
Right.
The whole the ecosystem of the forming an AIF.
Right. So I'll just give you some background on this, Brijesh. SEBI has introduced on October 21 a regulation which states that effective November 11, a merchant banker is required for every new PPM which is filed with SEBI, whether it's a master fund or whether it's a new scheme. That is point number one. And point number two is what they have stated is that every time there are changes in PPM, if they are not material at the end of financial year, 30 days from the end of financial year, it has to be the summary of changes along with the clean and red line versions of the PPM have to be submitted to SEBI within 30 days of the end of financial year, along with a merchant banker due diligence certificate. So now the question is that, when there are legal counsels involved, when there are tax counsels involved, why is the need of a merchant banker in the AIF regime? So, here I'll just go backwards and I'll just give you a background. So, FedEx, essentially, as a merchant banker, we do three things. One is capital markets, the other is valuations, and the third is investment funds. So in capital markets, we do a lot of public market work where we do listing of companies on the SME exchange and the main board. We do a lot of work on the open offers, a buyback, rights issues, pref allotments. So if you see the way the public regime is currently drafted, on every time we are doing a transaction, a merchant banker is required to submit a due diligence certificate to SEBI. That is the prerequisite of doing any transaction, whether it's a listing or whether it's an open offer or whether it's a takeover or whether it's an abridged prospectus between a listed company and an unlisted company. So, the merchant banker certificate was, commonly prevalent in the public markets, since inception. Now, what we understand is that, and we've had several, conversations with regulators where we understand that, they essentially want to move the public market regime to the private markets. And the other reason is that, in last couple of years, there is a couple of AIFs have flushed in. Like if you see, roughly we are doing more than 200 AIFs a year, right? And because of which, there's a lot of lag in getting approvals, SEBI approvals. So essentially, with the merchant banker requirement now coming in after November 11, and once SEBI is also used to the formats and the understanding, SEBI wants to fast track the process because earlier the time lag was essentially 2 to 3 months. Then once there was a lot of applications, it used to go between 2 to 6 months. Essentially now they want to bring it down to 15 days to a month after we submit a due diligence report in a specified format. So what SEBI is what SEBI is looking at? SEBI is essentially looking at a due diligence certificate where they look at the relevant extracts of the PPM. They look at relevant caveats in the PPM. They look at relevant disclosures of the PPM, and they do not go through the entire document, which are substantiated and done a sign off by a merchant banker, which helps them expedite their work and they get approvals. So, in last 3 months, we've done more than 50 filings as a merchant banker. So, and we have seen quite a few progress in more than 15 of our clients. So, that is the progress so far, and that is where we are going.
So, taking this forward, you find the merchant banker becoming one of the most important nodal agency, if I can use the word, to ensure that the PPM is approved and the approval process gets faster.
Yeah. So, a merchant banker is the only intermediary who is a SEBI registered intermediary in the entire process. Because if you see the legal advisor and the tax advisor, currently they are not in the regulated regime. So the reason why SEBI has introduced merchant banker is that merchant banker are regulated by SEBI and by a code of conduct. The due diligence certificate, as I mentioned, it was earlier already there in public markets, which is now moving to alternate and private markets. Okay. And what happens is that during our representations, which we have had with the regulators are more than comfortable when they meet someone who understands the product of funds very well, who understands the regime very well, and who understands what are the what are the things which SEBI is looking at? So, SEBI has a couple of parameters which we can discuss as we move forward in the call.
Yes. So, okay, now so what we are saying is that today, to anyone who wants to set up an AIF, the most important person besides SEBI is a merchant banker who can, who is the nodal point, who can also help have, all the tax advisors along with the legal advisors to be in one place and move forward. Is the understanding correct?
That's right. So I'll put it the other way around. Whichever legal advisor you use or tax advisor you use, SEBI is not accepting any applications without a merchant banker due diligence certificate. So again, the way a trustee is a prerequisite for a trust, a merchant banker is a prerequisite for doing an AIF application.
Oh, so if I understand correctly, what does it mean that the process of getting an AIF license or the timelines for getting an AIF license is cut short or can be leapfrogged?
So there is no explicit timelines given, but the understanding is that the process has been brought in to expedite all the approvals in the current applications. And we understand that the window should be should go between 15 days to a month. We should, if all the things are fine and everything is in order and SEBI does not have any questions, we should start seeing applications getting approved in a timeline of 15 days to a month. These are my personal views, but this is
Okay.
what we are seeing, that SEBI has been prompt and active in a lot of applications which we have filed.
Okay, so what it also means is the cost of setting up an AIF will also go up.
Hello.
So the cost of setting up an AIF will also go up, right?
So it's a tricky question, but yeah, whenever you have some kind of an access, there is a fee, but yeah.
Interesting.
To the extent of a merchant banker fee, the cost might go up. But at the same time, the cost has broadly come down in Feb 2020. SEBI has introduced a standardized format for a PPM. For all the councils, there is a straight and a standard format for disclosure of information. So it's very transparent. It's all the documents which you see are going to be pretty straightforward because SEBI has already defined what information has to come where. So even say from an investor ease, if an investor has invested in your fund or an investor has invested in another fund, as long as they do not have an accredited investors, which are more than 70 crores, and the standard format of PPM applies, the information which they will search out or which they'll make out from a document is faster and easier in a straight and a standard format. So to that extent, I think there has been a lot of realignment in terms of overall AIF cost also.
So how do you compare, the cost overall or the setup, if you say, of an entity as an AIF in India, vis-a-vis the entities which are set up, say in other places, say in Mauritius or Cayman, or for that matter in Delaware, which is pretty common.
Yeah. So in an AIF, what essentially happens is that when you are doing local pooling of money, it necessarily has to come into an AIF. When you are pooling funds from offshore investors, do not prefer to come directly into an AIF because they would not like to file their returns of income in India and be subject to tax in India. So what they normally do is that they set up a vehicle in Mauritius, Singapore, Cayman, right, which essentially becomes a pooling vehicle, and then they invest through an AIF. Okay. Now over here, in terms of cost, AIF is a license which is given to you and which is a one-time fee. There is no subsequent fees, unlike an FPI license, which has a validity of 3 years, and every 3 years you have to pay for an FII fee. The quantum is small, but having said that, still it's a fee. In an AIF with different categories, SEBI has categorically have separate fees and which run through the life of the fund. In an offshore jurisdiction, whenever you are doing a fund, it becomes it qualifies under a collective investment scheme regime, which is essentially called a CIS, right? And in a collective investment scheme, again, it depends upon the strategy of the fund, whether it's a closed-ended fund or whether it's an open-ended fund. In a closed-ended fund, essentially there is no redemptions, and redemptions are only happening at the end of the fund. And if it's an open-ended fund, investors can come in and come out at any point in time, depending upon lock-in, which is defined in the documents. So in Mauritius, an open-ended fund qualifies under the expert fund regime. A closed-ended fund qualifies under the professional collective scheme regime. The differentiation over there is that, in a professional CIS, the ticket size for each investor is Mauritian rupee 10 lakh, which is close to $25,000, right? And in a open-ended fund, expert fund, the limit for each investor is $100,000. And for an AIF, the minimum investment is a crore. Unless if it's, yeah.
So if you have offshore investors, setting up a fund outside with a minimum, cap table, or if you can, what do you recommend?
There are two things to see when you're doing an offshore fund. First is that in terms of the two things first is that in terms of governance, that where is the asset manager located? If the asset manager is located offshore, then there is no issue. If the asset manager is located onshore, then you may not have any option, but you would like to do a unified structure, that there is an offshore fund and then there is a pooling coming into the AIF. Again, if you have an access of an offshore asset manager, the decision factor for doing an offshore fund versus AIF is that what kind of deals do you want to do?
Okay.
So in an offshore fund, you can do FDI as well as FPI investments, right? Under the FDI route, but when an AIF does the downstream investments, if the Indian manager is a resident Indian owned and controlled entity, the downstream investments are not subject to FDI guidelines. So the deal breaker is that, when you're doing a lot of private equity and venture capital, and if you do not satisfy the FDI criteria, or if you do not meet the pricing guidelines when you want to invest into a portfolio company, you could consider again doing an AIF structure, because in AIF there is no, you do not have to follow the FDI guidelines. It is treated like local money.
In fact, yes, I never knew that this much time as a lapsed, and you have been and going on talking about. So you are an expert in this alternative asset space. So one last cue which we have is that what are the pitfalls which one should be as a fund, or someone who want to set up a fund should be aware of?
So when you are setting up a fund, essentially the three most important things which you should look is the investors which you are looking at, the target companies which you are looking at, and the jurisdiction which you are doing, and the structure which you are doing. Now, what essentially, when I am speaking with my clients and, I'm advising, so if it is an onshore client, then obviously AIF is the way to go. When we are doing Cat 1, Cat 2, or Cat 3, whether we are doing a trust structure or an LLP structure, what is important from a tax point of view. So if you have a capital gains, if the only investment is capital gains and not business, then you are actually indifferent from a trust and an LLP standpoint. And we've seen that most of the investors go with a trust pass through. People go for a trust structure. In case you are having business income, whether it is, what is the quantum of business income, what is your allocation towards the investment which constitutes business income, and whether you should do a AIF as trust or an LLP can be evaluated. And this is also more important in the context of investors. If investors are not okay with the LLP format, then you do not have an option but to only go for a trust format. And again, investor, it constitutes both, whether they are offshore as well as onshore investors. So obviously, offshore investors do get the benefit of treaty. It is in same manner like extent as if they have directly invested from the offshore jurisdiction they are coming. So having said, you consider geography, you consider people, geography, and the portfolio investments which you are doing, and which is in line with the strategy to make decisions of investing into a structure.
Great. Yes, this has been very wonderful to know more about it. You definitely have added, more information, knowledge to us personally, and we hope, the listeners of the podcast will also have the same value. And from Auxano, we wish you and Fedex, all our good wishes. We thank you for your support over the years.
Thank you so much. Thank you so much for having us on the call, and do let us know wherever we can help you in your journey for your next fund.
Yeah, great. Thanks, Yash. So this is Brijesh from Auxano signing off for Auxano Bytes. Thank you.